on, everybody? 360 Digital Closing Bell here. I am your humble correspondent, Michael Tanner, joined for our weekly Look Back podcast here on this beautiful April 10th. Joined live from an undisclosed location here in Denver, and as always, joined live from an undisclosed location in Dallas. Executive producer of the show, director and publisher of Oil and Gas 360, Stu Turley. How you doing, man?
I'm doing fantastic. I'm worn out this week. Our news desk has blowed up, as they say in Texas.
Yeah, no, we have had a large amount of stuff, but it's been so good, and I'm fired up to do this podcast because there's just so much stuff has happened this week, and I just need to, a lot of stuff I got to get off my chest, most likely. We really have a great show lined up. We're going to first start out going over a report that was dropped by Inverness that was really sort of a holistic market outlook for the next couple months. We were able to deep dive then that article with Bernadette Johnson and Oil and Gas 360 Energy Network podcast. Shameless plug for the new podcast that just dropped. We're going to go dive into the week in review, OPEC rumors. Holy smokes, that was a roller coaster of a day. We'll check the levels for EIA and the oil price levels. Tomcat was back last week, Fang, with a winner. This week, he's got a new pick for us. We will check in on that. But before we get going, I need to just get some clerical work out of the way. Please, if you are not subscribed to the show on iTunes, Spotify, YouTube, Twitter at Entercom, please stop what you're doing, pause the show, finish it, but pause it, go subscribe, please give us some love, rate, review, subscribe, do whatever, make the algorithms go great. We really appreciate it. You can interact with us at the show, Oil and Gas 360 on LinkedIn, Entercom on LinkedIn, Michael Tanner, search me on LinkedIn, Stu Turley, message him on LinkedIn. We had great reaction to last week's show, and I actually got we got a little proprietary research that I want to share with you guys, but I'm still working through how best to keep it all underground. So that's probably coming on Monday. So stay tuned for that. I'm working through. The Energy Expert Network has also launched great new interviews, Land Docs. Stu, you just dropped last night. Great interview.
Yes, absolutely. It's already got nice reviews out there and a lot of views.
And as we will get into, we had there was an interview that Aaron Vanderford, the president of Entercom, and Stu and myself were able to sit down with Inverness and Bernadette Johnson to talk about some of this market outlook. And that's really what I just want to start off with. And really, before I get into maybe my thoughts on it and where I sort of see this going, I want Stu, I think he's going to do a really good job of giving you an overview if you missed that interview, what sort of some of the highlights were, and then some of that stuff from that article.
Oh, you bet. Hey, thanks, Michael. First, if anybody doesn't know who Inverness is, they know their stuff. They're data oriented. Yep. They've got about 7,000 employees. They're in 50 different countries. They're data. And if you want to know anything, if you're going to make a decision, do it with data. And if you're going to have data, have Inverness. So with that, Bernadette is one of the most knowledgeable folks out on the planet.
She's brilliant.
Isn't she crazy?
Oh, she is. She just is so quick on the trigger with a lot of these numbers, and it's really impressive for somebody who sits and does these podcasts. No one sees this. I've got 4 screens of research that I need just to get all of these numbers straight. She was just able to bing, bang, boom.
And I wonder why you had that kind of silly look on your face when you were sitting there. That's the first time I've ever seen you with your mouth open going, holy smoke, somebody smarter than me.
I've run into people smarter than me all the time. My mouth was, because she was unbelievable. And oil was actually going nuts towards the end of it. So I was trying to see if I could swing. And as you can see in that interview, I cut it at the end there. It was unbelievable.
Which was very cool, by the way. Well done.
Thank you.
When you take a look at the market that we have right now, we have the demand slashed. We have the prices then we have the production overdone. We have the full amount of storage. And as you and I talked about in the closing bell, they're even trying to stuff
anchors
into rail cars.
Yeah, unbelievable.
And the law says they can only put them in for 48 hours, and they're like kind of forgetting that they're there. So you take a look at that entire mash, and she was saying that it's going to be Q4 before anything starts to normalize in that area, except what you talked about the other day was the Marcellus gas, and gas could get up to $4. And if gas gets up to $4 on that natural gas, the Marcellus is a good play.
Hint, buy Intero Resources. We don't give investment advice.
We don't give investment advice, but you nailed it, because those were going right on up. And that was based off of before our interview with Bernadette. Oh. And so when you take a look at their report, the Haynesville, Utica, they really take a look, deep dive on that. So take your time, take a look at that article. It's called The Dark Side of the Boom. And it went out on your earlier podcast, and as well as it's on Oil and Gas 360, and we've published it out. It got fantastic legs today. It went everywhere.
No, and really, because there's a couple crazy things in there that buried deep in this really intense report. First was the fact that Enverus forecasts natural gas prices will exceed $4 and could reach $4.50 as early as this coming winter. Now, I don't know if anyone knows, natural gas is $1.74 right now. What? That's a lot of green to be made if you really believe these guys. That's a lot of green if you want to start trading. You know what I mean?
Their data they got data. Okay. Remember that old got milk? Nah, they got data. So I heard that and I was like, anyway, okay, sorry, didn't mean to interrupt you.
No worries. It's just if you that's the craziest thing to me. I mean, we don't talk much natural gas on this podcast specifically because that's not my area of expertise when it comes to trading. So I'm just not. It's a much more mechanical market the way it trades.
But it's all related, Michael.
It is all related, so you have to pay attention to it. But there's a reason we don't necessarily talk about, the levels, where's it going. That's a much mechanical market. But really, if you're talking about natural gas being $4, not to say, I'm not saying I told you so, but really I thought it was decent. It's decent advice. Go look at companies who are mainly producing natural gas specifically out of those areas and just work backwards. Where's the natural gas coming from, and will it be in areas that are going to see this massive contango? And start buying. We don't give investment advice, but
here's the other thing. Bernadette was also saying that if we have the negotiations and the pricing comes back in, why don't you tell me a little bit about what you saw on the news? Because the pricing, if we don't stop the East Como from importing LNG, we got to sell our own natural gas and everything else out there. So does that make sense?
Yes, no, and really from a news standpoint, oil's up, down, supply, all of this OPEC stuff, and really what Bernadette talked about, which I thought was fascinating, is that rarely have you seen, when you overlay rumors versus the news, what that does to the actual oil price. And it's something we talk about, and And as a trader, we always talk about buy the rumors, sell the news. When you see somebody like Bernadette at a role in Enverus, not saying that, but telling you that's what the data shows, I mean, that's just it really makes more sense when you look at how these huge swings of oil go. And when we get into specifically what happened this week in oil and today, holy smokes, you'll see that it's just rumor news. Before we get into that, I just want to talk about the sort of the second piece that I took out of this report was the hedging volumes for 2021. So, hedging volumes are down 60 to 70% from 20 to 21 when you talk about, and really that's because a couple things. One is because now insurance is expensive. Oil's $23 at the moment. Market's closed. And insurance is spicy because guess what? They're in the hospital right now. oil's on life support and it's trying to ask for an insurance policy raise. And the government's like, great, yeah, you can have it, but it's going to cost. So what you're seeing is companies waiting to hedge to hopefully if these production cuts can come in. And this is what, now we're getting to my speculation. I think the reason why the data is confirmed, the data is showing these hedge volumes low is because companies are waiting for price to come back ever so slightly, whether that's via OPEC cuts, U.S. cuts, some sort of SPR buy by the DOE. However, the supply, whether COVID-19 or the coronavirus, dissipates maybe a little quicker than people think. Whatever the scenario you think, whatever could happen, they're waiting to see that price come back, and then I think you're going to see those volumes spike tremendously because the insurance is going to become just a little less. Those premiums on those really, you got to sell puts at a high level, and those are where your expense comes in, especially. If you're either, especially when you're doing collars. So that's partly why I think it's so low, but it's really scary to see because if prices don't come back, you could have a scenario in which prices are so low and companies are unhedged going into 2021. So it's a very, that's what I'm seeing out of this, too. It's unbelievable.
Unprecedented.
Yeah, it's just, it's really crazy. And if we went into a 2021 unhedged, or not unhedged, there's some volume hedge, but holy smokes, it would be an unbelievable thing.
I just had a thought. Last night when I was on the bicycle, the trainer, President Trump again had a question. And the question was, are you going to do anything? And he smiled and said, I already know what I'm going to do. Do I want to? Ooh. Yeah, I think it'll be fun. He said, if I did it, it would be fun. That man is just diabolical with business knowledge.
It's
unbelievable.
And what's crazy is I have no idea. I can't even think of what that would possibly be. I heard a couple rumors that the DOE was looking at how can we increase storage in the Strategic Petroleum Reserve, talking about, are we talking about public stakes in some of these dying companies? Government stakes. I don't know. Who knows what this could be interesting, but we will be watching that. And obviously with any of these, we talk about, all these predictions and, what we're going to do is roll into news here very soon. I just want to mention one other thing about supply along this note is Trump can tweet at any moment and change the market like that. So, but before we move into the week look back at oil and trading, one thing I want to mention along the supply note, because one of the big things that Bernadette and this, dark side of the boom, Enverus report talked about was the oversupplied market. They see, and Stu, correct me if I'm wrong, in her interview, she mentioned 20 million barrels. That's their expectation, or 30?
Yes.
And there was 20 somewhere to 30. The interesting part is yesterday, Ryan Sitton, who's one of the 3 Texas Railroad Commissioner, came out with a webinar where he actually believes the market is only undersupplied by about 18 million barrels a day. So it's a little more of a conservative route. The issue is he still thinks that number is unbelievably disgusting, which it is. It's terrible. So, that's sort of, when we all started this thing at 8, what were the original? Because I can hear, because I remember each show we did, because that's just how it works. The first one we did, we were talking, 4 to 5 million barrels. I remember that first. Remember we were talking about the Goldman Sachs estimate? I remember. I did a podcast for another provider right after this thing happened, and the big news was right when the podcast recorded that it was 4. 3 days later, it was already 10. We had to go in and amend the episode.
Yes. And I think you just went from 23. We had been talking about that, 20 to 23. And within 45 minutes, you just went to 30.
Yeah, so maybe it's not 30. But whatever the number was, I think I said it was 20 to 23, right? Or what?
Oh, yeah. But no, I'm talking it could be 30.
Oh, yes. No, okay, that makes sense. No, it could be, who knows what could happen. And one of the things she mentioned specifically was that jet fuel is going to come back way slower than a lot of this, than a lot of the regular stuff. And that was one of the big things that I know she mentioned in there.
And she also said it's not going to turn on
quick.
it's going to be a slow turn on.
Yeah, exactly. And so, that's really, like Stu mentioned, if you haven't read the report, please go check that out at Enverness. You can check that out at oilandgas360.com on our LinkedIn. All right, week look back in trading. As always, this segment is sponsored by the guys at Sandstone Capital Group. I'm telling you, in this market volatility, these guys provide the best research and insanely good pricing. Rumor has it they're launching an energy newsletter next week. It's just rumors, though, so I wouldn't hear anything. But I'm telling you, these guys, they provide all the research for this podcast and some more stuff. They have an energy glimpse solution that's great. If you need help navigating these energy markets or just need, handling what's going on, please reach out. Connor at sandstonecg.com, or you can give him a call at 9495611818, extension 2. Extension 100. I lied. That's an old thing. I reuse the show notes from each episode, a little behind the curtain, and I gotta change that up. Yeah, we change extensions. 101 is this extension. Mention the podcast, and I promise you're gonna get a sweet deal. You gotta mention the podcast though, so you got sent here from there. That's the only way we get credit. Really, when we look at the week of oil, I think it's best to just sort of walk through what happened. And really it was news driven. And to be frank with you, it was a roller coaster all week. Today, if you were watching the price of oil, if we were a cat, we'd be dead, because I think 9 lives was about all I lived today with the different amount of news that dropped. Oh my goodness. It was unbelievable. As you know, OPEC meets tomorrow, or, they met tomorrow, which is sort of today when you talk about the timeline, when all of this was dropping. And we just had an unbelievable amount of rumors cut off. So the original rumor, let's go back to Tuesday. The first one, and this was when we were on the interview with Bernadette, which was Wednesday, which was sort of also confirmed on Tuesday, which was what? 10 million barrels is coming out of Saudi and Russia. They're going to look elsewhere for cuts from specifically the U.S., but then also there's going to be a group of nations that they would like to, and the goal is to get up to 20 million barrels cut. So that's what the market is expecting as it's rallying up to what we saw at a $28 ceiling at least twice. That was the rumors that was driving it. Hey, OPEC, specifically Saudi and Russia, are cutting 10 million barrels. Well, then guess what happens? Meeting OPEC via, virtually, social distancing. It was virtual. They probably weren't using Zoom, though, because of the security stuff. I wonder what they were using.
Oh, that's a funny one.
Yeah, I wonder what they were using for their virtual OPEC meeting. That must have been a struggle, though, trying to translate. That would have been interesting to be behind the scenes on the virtual OPEC plus meeting.
I got nothing.
I know. I just think it's funny. So, that's the stage that that oil price and these traders are looking at when they expect the news to drop. They expect 10 million barrels cut from Saudi and Russia, and they expect, 15 to 20 from everybody else. Well, what happens today is twofold. OPEC delegate gets leaked to the press. OPEC members agree to cut production by 23% in May and June. Saudi and Russia will apply 23% cut from an 11 million barrel per day base, which implies they're only cutting 8.5 million barrels or 1.5 million barrels less than they were planning on. And they confirm they want to see 5 million barrels cut from non-OPEC members. Iran oil minister comes out and says there are 2 proposals for 10 and 11 million barrel cuts, but that still keeps Saudi and Russia under that 10 million barrel limit. And then at the last minute, Mexico tried to throttle it all. And this is where literally, we're at like 3-4 lives lived by now. All of a sudden, Mexico starts threatening to pull out and pull the plug on this whole thing by saying they're just going to continue to ramp up production and not going to agree to any cuts. I mean, they were chopping. I was getting to the end of my rope here coming up, and I was really waiting to finish the outline until all of this news could drop. And really, what it ended with Mexico right here. Reportedly, OPEC members have convinced Mexico to agree to production cuts. All OPEC Plus members are now on board with the cuts. Mexico reportedly threatened to withdraw after refusing cuts, may abstain from voting on the deal. OPEC ministers are still trying to convince Mexico to cut 4,000 barrels a day. So that was what Mexico was threatening, 4,000 barrels a day. Finally convinced them. I mean, that was about the end of my rope. I was sweating in my seat as the closing bell was coming up. And it was unbelievable. I have no, unbelievable. And that's all I got to say about that. Whew.
Let me just add this in there, Michael. What did Olivier teach us, or what is his gig?
NAPEC.
Here's Mexico. I was on the phone with some Canadian clients today. They want to secede from Canada. Any oil company wants to just secede and become part of the U.S. because of the Canadian government's lack of support. Well, why don't we have NAPEC? Why don't we buy our heavy from Canada and Mexico? Let's do our own trading. Let's have NAPEC instead of OPEC.
Maybe that's what Trump is considering in his secret meet. Maybe that's exactly what Trump's considering. Maybe that's what he's got. Maybe you're ahead of your time. But so that's really the news. And, you saw two levels this week, $28 get hit twice, both one at the lower mark, 28.28, and then the cap this week at 28.92. That was, again, off the rumor. News comes out, just depresses it. Really the other big news is, the market is now, because, based upon these rumors that dropped today, April 14th now becomes really D-Day for, Texas. They're hoping to cut 10% of their production, and that would fall in line with what OPEC is expecting, because OPEC came out today and said on top of the cuts that are a little less than what we already thought, we're expecting the U.S. to do the full 5 million, and the majority of that's got to come from Texas. And so this sets up really a battle of the titans. Pioneer and Parsley, the original people who sent the order, sent the request into the Texas or the Texas Railroad Commission in order to see if they can reenact appropriation or proration, which is basically setting production volumes on what they can produce. Two majors, well, I should say one was a former major, one currently is a major, Oxy and Exxon, are really screaming, let the market decide. Oxy from a standpoint of they have production volumes they have to hit, or else their $40 billion of debt gets called quick, and they're in Chapter 11 and underwater. Almost a year after acquiring Anadarko, it would be a catastrophic collapse, and I promise you if that happens, I'm going to do like a documentary series overlaying this entire process. Like it's a 6-part series at least we could dive into. So that's really what I'm looking for, off these OPEC plus meetings is what does this battle happen to? Are there more companies that come out pro or for or against production cuts? Who are they? What are their motives? And what ultimately happens the 14th? And then obviously the vote is then the 20th. So we'll see what happens there. As far as levels for the week, oh my, there's a lot of levels because oil was at its worst, $22.51. At its maximum, like I mentioned, was $28.92. So currently we're at $23.19, which is on the lower end of that scale. If you're a bull and next week you think you think the U.S. is going to come out and cut production and maybe cut production more on a national level, if you're like Stu and you think Trump has something up his sleeve, which he just might, well, really, you've got 4 levels I'm looking for and more like 2. I think 24.85 is your first level, which is the top half of that really intense volume chunk that spans 23.52, which is about the level we're trading at now, all the way up, like I said, to 24.85. Huge chunk of volume. I wouldn't be surprised if that's where we hung out all week. If we get above that level, I think we run up to 26.65, though, and as our next level of resistance, especially if you're a bull. Huge volume chunk that skirts out right away. It's the point of control for the entire week. So point of control is where the most volume, which is basically the most amount of shares are traded at what price level, point of control for the week. So I love that level. And it's really isolated. If you're looking at the charts right now, which I'll make sure to put in the show notes, big chunk of volume right there. Top end of our levels, 28.28. If you're an insane bull, you could see it getting up there. That's really going to be off. There's going to be there needs to be new rumors. I think. I don't think the market has enough pulse just with if the news matches the rumor, I don't even think we still get up to 28.28. There's got to be some new information that drops, I think, to get us up there. But if you do think that the news is going to stack up to the rumors, like I said, 24.85, 26.55, those are, I think, my first 2 levels. If you're a bear, 23.50, 2 is, 23.50, like I mentioned, is the pivot point right now. Currently, we're trading at 23.19, but really that 23.5 mark is a pivot from the downside. 22.50, I think, is your next target, and then 20.39 if you're an insane bull. If you really are insane bear, if Texas doesn't come out and cut production, we'll see $19. We had 17 dollars lined up, a week and a half ago before some of this OPEC news came out. So if there's some failed agreements on the U.S. part, I think we can expect probably to see that number go down a little more. As far as the EIA numbers are concerned, crude stocks, up this week, 15.2 million barrels compared to last week, which was 9.5 million barrels. Gasoline stocks were up 10.5 million barrels. Distillates only up 0.5 compared to 0.1. Utilization was down to its lowest percentage, 75.6%, which is as low as since September 2008, which is the height of the stock market. But really, if you're a trader, and this is what I said on the digital closing bell on Wednesday, and I wanted to just talk about it more here, was if you're trading EIA inventory days, which 8:30 Mountain Standard Time, I love trading oil order flow, specifically on DOE trading, because specifically when those numbers come out, a lot of computers love to get in and trade those numbers. So if you can ride the order flow wave correctly, let the bots sort of that initial pulse get out of the way, catch the rise or catch the fall based upon whether it was a hit or miss. Love trading that. But again, we don't give investment advice. You can choose when to trade or when not to trade. Doesn't matter to me. But if you do choose to at this point, do not look at crude inventory levels as your main source for what the market's going to do right at 8:30. What you need to be looking for is domestic crude production. Big, heavy traders, they're looking for, and what computers are going to be looking for now is the week-to-week crude production, and they want to see a draw. And so this week we saw a 6,000 barrel or 1,000 barrel a day week-to-week draw, which is our largest drop since 2019, and I expect that to continue to happen. And if you're trading DOE, that's what you need to look for, domestic crude production. Stocks are going to go crazy. They're going to be wildly above one day, wildly below. Now, if it's below, maybe. That would be good. If estimates were to that if it's below than estimates and specifically lower than the API, yeah, you might definitely take that into account. But if crude is overstocked, not to be corny or pun intended, but I don't take much stock in it because I really think what traders are looking for is the crude production on a week to week basis. And so that's what I'm looking for at the EIA level, and that's really sort of the week at oil. If you really want to see, we'll be back on Sunday for a Monday podcast to get you guys sort of ready for the week. So I won't get into my thoughts too much next week. I got a rant Sunday I have to get off my chest, so I'm saving that. We'll make sure the coffee level's high for that because I got to get it's large, and we'll definitely get into it with Nick Berry as well. We'll talk to him at the end. But right now, what I want to get into is our company to watch, which is Apache for the week. Again, courtesy of our favorite anonymous tipster, Tomcat. We got to do a special shout out because he gives us FANG last week and crushes it. Exits Tuesday of this week, which was, I think it was a 10, 12% increase is probably when he exited. I was watching it and trading it myself as I would if I was in his same position. So I bet you it was 10 to 12% he was up.
He did more than double his money.
Woo! And that's what we like to see on this podcast. And this week he's got another suggestion for it. It's Apache. Why is it, Stu?
Well, the charts. Charts turned Tuesday, confirmed Wednesday, and we're seeing it happen. So Tomcat's dead on right again.
And to take you inside Tomcat's mind, because if you're a trader, I want to just quickly, if you're on YouTube, I'm going to share my screen. If you're listening to this via podcast, I'm going to do my best to explain, but I really highly recommend you take a look at this link I'm about to put out. It's to tradingview.com. It's an open source trading platform. And what's really cool about this platform is that I can share a link with you and you can go in and interact with the charts that I create. And so it's open source. It's completely free. You can just create a free account and you'll be able to see my charts. Even if you don't have an account, you can still see the charts. You just won't be able to interact with it. And so if you're on YouTube and you're watching this, what Tomcat is looking for is moving averages crossing each other. He's looking for a couple things. He's looking for moving averages crossing each other. He's looking for MACD, which is turning around right here. And he's looking for some RSI turning around right here. The big thing that he's looking for, and this is just a guesstimation, so we might have to get him on with a voice changer at one point to confirm, but what my guess he's looking at is he's looking at a long-term swing trade, which is obviously not over the next 2-3 days, which is probably a week to 2 week trade specifically on Apache, is the 200 crossing the 50-day moving average. It's one of the largest institutional signals on the planet. It a trader saw this and he was at an institution and he was trading a large index fund, he would buy this stock now and hold it until these two crossed again. It's one of the best entry exit. It doesn't always work, but it's a very low risk, very decent reward style trade. And if you're a swing trader, I love looking at it. And specifically, he looked at volume, big was getting traded, which means there's a lot of people interested in the market. Upside, I think, is fairly, for the next, week or so, I really like. So on a swing trade perspective, which is, that's what we're looking for. And along that note, we have to take a little side note here. We had a really great anonymous tipster last week again, not Tomcat. We'll label this guy Analytics Guru. We'll figure out a name. We'll call him Analytics Guy for now. But he dropped a really, really great research. He dropped his Python script, which I checked out and is unbelievable for looking at some of the trading buy-sell signals. This is stuff that's used on Wall Street. High-level stuff here, folks. And then he dropped some very interesting information talking about the insolvency of some of these companies. And he confirmed what I had been believing was, while in the end, and he was basically bullish or bearish on FANG, and was basically disagreeing with Tomcat. And I think we're and basically showed statistics where Diamondback is not one of the 10 companies that are going to stay around with us, that they're dead. And that is an interesting. I love the research, and I'm actually slowly convinced, but. Initially what I want to, clarify is when we talk about swing trades, I'm a day trader by nature, which is 10 seconds in, 10 seconds out. When I talk about a swing trade, I'm 1 to 2 weeks maximum. Sometimes it's 2 days if the charts work out, like FANG last week. Yeah, that might have been set up for a 2-week trade, but if you hit your target, if you enter a trade and don't have a target of what you're looking to, you're not, you should stop. Find out where your entrance point is and set targets, because you should not just buy and hope. Even if you're trading for long term, set some levels, because you never know what the market's going to do. That's a pro free tip of the day from Michael. If you're going to enter a trade, make sure you have a target mapped out. It's essential to a trading plan, and I promise you it'll help. So when we get back to Apache, this swing trade, I looked 1 to 2 weeks, see this thing run up $11, $12. I know the entrance point was probably very good. He's probably in it anywhere between $9.50 and $9, maybe $8.70, which is a good value on this, especially because I think equities, especially energy equities, and when we'll get into this a little more on Sunday, I think they're set to run next week because the market's going to do very well. It's flush with cash. I'm seeing stimulus money get dropped all over the map. So what I don't like about Apache, though, is in the long term, I think they're in deep trouble. I think their balance sheet is in a state of decline. That's their technical analysis right here.
It ain't good.
No, it's not good, but hey, oscillators have a buy on Apache, relative strength, average directional index. I mean, the technicals do give Apache in the short term, and we're talking about a 1 day right here. If we want to go out a month, it's a little different.
It is not there. It's a strong sell on long term, 1 week.
Yep. So, from a perspective, and I'll go ahead and bring it back to me. That's what Apache, I think, is in the long run, I think doomed. Now, in the short run, I think you can make a little bit of money on it because I think, like I said, energy equities are going to be back. But short term, it'll be interesting. I think Tomcat's going to make some cash here, but we'll make sure to check in next week. And if you guys have any picks that you would like or have any tips you'd like to drop to the show, please reach out to either me or Stu, mtanner@entercomic.com. I'll drop it all in the comments. Wild week, and I think that's really all I've got for the show. Do you have anything else that we forgot? And NewsDeck's what crazy? Can you show two things we need to show everybody the research you've got. If you're not watching this on YouTube regularly, he showed me this morning. It's papers on papers of just the desk is crazy.
I'm a digital guy. You ought to see my digital stuff, but I'm over here. I'm neck deep in it.
Yeah. And Michael, I need an update on the mileage on the trainer. What are we up to?
30 miles. I was so frustrated with all this market and all this news. I'm going to go do another 30. I'm going to hit probably 120 by Saturday. So, hey, Michael, again, thank you for letting me on the show. B, you are hitting your numbers. The feedback I'm getting, everybody's really positive, and your knowledge of the industry is coming through. So thank you very much, Michael.
Yeah, no problem. I really appreciate all the great feedback, and really, if anyone is interested in coming and Sandstone, is a proud sponsor of the show. But if anyone is looking to get a partnership and do up on a sponsor, I would love to talk with you guys about how we can get a sponsorship set up. The reach of the show has been unbelievable, and the outflow of support I've had from everybody is awesome, and we're just going to keep it going. There's going to be more content coming. So I think with that, I'm going to go ahead and let you guys finish up your beautiful Good Friday because you're listening to this. I appreciate you taking time out of the day when the market's closed to update yourself on what's going on. And we will see you guys on Monday morning with an outlook on what's going to happen this week in crude.
Happy Easter, Michael.